But if you look at, the size of the company, it is 1/4 the size of the smallest company out of the other four. So if it is the fifth company in the list, it is 1/4 the size of the other companies. So the CAGR obviously will be always better in terms of revenues and other things. Um, the only advantage which they claim to have is the differentiated products leading to a greater brand recognition, and that is something which is important, because I think what we are having in the current scenario is disruption and innovation. I think whoever innovates, whoever actually brings out differentiated products are the winners. That is something which will, in the course of time, give rise to the valuations if and when Indigo is listed. Then of course the brand building exercise which Indigo has, it really doesn't have one right now, but once it gets listed, once they start advertising, the brand will be created. And again, it depends on how they create the brand, whether it is, again, like for example the geo aspect, whether they disrupt and make out a brand for themselves is to the important aspect which they have is they have a penetration of 27 states, but to the extent they are in tier 3 and tier 4 cities rather than tier 1 and tier. Though they are in 27 states, that's one thing to be considered. uh, they claim that they are strategically located in terms of raw materials. So they have the advantage of actually proximity to the raw material so that the production is not disrupted. To come to the weaknesses, and there are quite a few, and I've said, please see the DRHP starting page 23, because there's a whole list of more than 20 risks involved. And some of them, I would say, is they do not have a long-term agreement with suppliers for raw material. So if there is any disruption in raw material supplies, their production is going to be impacted. The second thing is, in terms of external transport, they are not tied up. So, they have to depend upon third-party um, distributors in terms of their most important point, contingent liabilities to the tune of 31.5 crores. And if you look at it, it is there in the FY20. It was not there in the previous year. So I'm not sure on why it was not. Has it come to light only now that they are going in for a public issue? I'm not too sure of that. But there is a VAT liability amounting to 30.11 crores. And there are other things which are material in nature in terms of litigations also. So you need to have a closer look at those. Most importantly, whether it is Asian Paints, whether it is any other paint company, oil is the major input for all these companies. The price of oil will determine how the industry will grow or degrow going forward in terms of prices and in terms of profitability. So from that angle, I will come to it later, because I'm going to take oil as well as the other things as a separate, on technical analysis. So we'll come to that later. The next slide, opportunities, I think, as I said, disruptive, innovative products, if they have it, great. And how they come to a situation where they are going to actually factor in and win over the tier 1, tier 2 cities is something which is going to be very, very important. Those are important opportunities. Those are great opportunities, actually, because if their products are good, their quality is good, they can be a winner. Threats, as I said, oil is a major threat. In their report itself, in the DRHP which they have filed, the next clause on threats is what is mentioned. Floods in Kerala. Now, 46% of their production arises out of their manufacturing facility in the state of Kerala. And there were 2 disruptions over the last couple of years because of the rains, the flooding. And Kerala was also impacted in a big way by way of COVID-19. So from that angle, this is something which you need to be looking at, because disruption will take place, or should we say, will it take place, is a question mark going forward in the next few years. So from the point of view of how we look at it in terms of the valuation, priced at around 1500 to 1600. Now, the lowest of the are quoted around 41 PE. Now, these guys' profitability is around 41 crores, 42 crores, giving them something like a ratio of the price should be around 1800 to 2000. But then contingent liability is a factor which you should consider. Will it be an important aspect? Secondly, the size itself.
The Indian investor, the institutional
IRFC, it's almost a public company in terms of the shareholding stake. There's a minor stake held by other institutions, I should say, which is not more than 10% or 15%. So that really doesn't matter. But what matters here is from the point of view of being a monopolistic arm for the financing of the railways. It was set up for garnering funds for the railways. I think this was a ploy where it was very important, to do away with the budget for the railways, which always used to be coming up year after year. So this was a ploy where a financing arm was put in place. Whatever financing needs for the railways is met through the IRFC, whether it is in terms of capex or for rolling stocks. So if you look at the presentation itself, you would see that approximately 48% of the amounts which are generated for financing is for capex projects, and the rest of it for rolling stocks. Now, what are the strengths? I think the strengths are that IRFC is neutral in terms of interest, and this is the most wonderful thing in terms of any NBFC, because when you have something where you are actually building a block, where you are actually doing a cost plus in terms of your pricing, there's a pricing of approximately 0.4% in the last 2 years over the price of the bonds which they actually go to the market and generate financing from. So IRFC goes to the market if and when required, gets the bonds. It is, it's a bundle of whether it is interest, future interest, whether it is even hedging. So everything is, included in the cost of those funds. And then there is a markup of 0.4%. So the risks involved is quite less. And that's one of the reasons why I say that, it's like a annuity. This is annuity income for you. Year after year, there will be growth depending on the growth of the railways, and they'll be issuing dividends. If you see the last point on dividends, there is a clause which says, as per the CPSC capital restructuring guidelines, central public sector enterprises are required to pay a minimum annual dividend of 30% of its profits after tax, or 5% of its net worth, whichever is higher. So there'll be a definite dividend generated when you actually get into these shares. So from that point of view, I think it's not a loser. It might not have a growth aspect. It'll be an annuity product. Slowly and steadily it'll grow, but it won't, give a loss on your holding. The other aspect which you should be looking at, and I don't know whether these guys are actually doing it or not, the amount of ECBs which can be actually borrowed by this institution is 75 crores USD. So 75 crore USD per annum can be converted. If there is an old debt, actually it should be converted into new debt, because they are already taking care of their hedging facility in terms of USD. Secondly, interest rates in the foreign markets are almost negative, and they stand to gain, and the railways will stand to gain if that's the case. So those are important aspects. And if you see the CRISIL ratings, AAA, CRISIL A1 plus, ICRA and CARE also have the same rating, whereas I would understand the ratings which are given by Moody's, Fitch, as well as S&P. The problem is they are more dependent on the government's rating rather than a company rating per se. So that's where we stand. And non-performing assets obviously nil as of 30th of September 2020. What is the weakness? It's a government enterprise. You will have problems on bureaucratic decision making. That's something which we will have to live with. The next slide. I think the opportunities are there, and coupled with it, the negative factors also are there. The same factors will be negative for them also. The problem is
story. Great work, team. Excellent. Thank you, everybody.
Thanks a lot.
Thanks, everyone. Thank you for support. Thank you to the speakers. Thank you.
Thank you, Manoj.
Thank you.
Clear indication.